Hey everyone! Before we jump in, just a quick disclaimer. Sean Sullivan is an authorized representative of Vivid Financial Planning and holds an Australian financial services license. Now, the information we're about to cover is general in nature, so it doesn't take your personal situation into account. You should always consider if the information is right for your own needs and, where you can, get some professional advice from a financial advisor.
Let's be honest, the world of aged care finance can feel, well, overwhelming. It's like a maze. So in this explainer, we're going to decode a real-world financial plan for a woman named Margaret to show you how a clear strategy can bring security and some much-needed peace of mind.
And this is the question, isn't it? It's the one that so many families grapple with. How do you find that balance between paying for quality care while also protecting the legacy you've worked so hard to build? We're going to find a practical answer to that.
So here's our game plan. We'll walk through this in 5 clear steps. We'll start with Margaret's challenge, look at her finances, break down the costs, map out the strategy, and finally see the results of that plan in action. Okay, first up, let's meet Margaret. She's 88, she's a widow, and she's at a point in her life where she needs long-term residential care. Her main goal is one that I think a lot of us can relate to. She wants to fund her care without completely draining the estate she spent a lifetime building. So her goals are pretty specific, and you can see how they're all connected. It isn't just about paying the bills as they come. No, it's about being strategic. It's about finding ways to reduce costs, make sure she's getting all the government support she's entitled to, and ultimately protecting her financial future. Before you can build any kind of strategy, you've got to know exactly what you're working with, right? So let's take a quick look at a snapshot of Margaret's finances right before she moves into care. And this shows a situation that is so incredibly common. The vast majority of Margaret's net worth, we're talking over 90%, is tied up in her family home. This makes her asset-rich, but cash-poor. And that, right there, is the key challenge that we need to solve. All right, now we're getting into what is often the most complex, most confusing part of this whole journey. Understanding all the different fees. It can feel like a landscape of acronyms and jargon, but don't worry, we're going to break it all down piece by piece. The biggest cost is usually something called the refundable accommodation deposit, or RAD for short. The simplest way to think of it is as an interest-free loan that you give to the care facility. For the home Margaret has chosen, the RAD is $550,000. And while that is a huge, scary-sounding number, it's so important to remember that it is fully refunded back to the estate later on. And this brings us to a really critical fork in the road. Does Margaret pay that $550,000 RAD as one big lump sum, or does she decide not to and instead pay what's called a daily accommodation payment, or DAP, which is about $114 a day? You can think of paying the DAP as just paying interest on that big loan we just talked about. This single decision has a massive impact on daily cash flow. Now, on top of the accommodation, there are other daily fees. There's the basic one for daily living, things like meals, laundry, utilities. And for Margaret, that's $65.55. Then there's a means-tested fee, which is a contribution that the government calculates based on, you guessed it, your income and your assets. So, we've laid out the challenge, we know the assets, we've decoded the costs. Now, let's get to the solution. This is the core financial strategy that was recommended to help Margaret meet her objectives. The plan itself has a pretty simple 3-step structure. First, sell the home. This unlocks all that capital that was just sitting in the property. Second, use that capital to pay the RAD in full, which immediately stops that daily interest-style payment. And third, invest a portion of what's left over into a product that's designed to generate income while protecting the estate. This specialized investment is what's known as a Care Plus strategy, and it's pretty clever because it has 2 parts working together. One part of the money buys an annuity, which provides a guaranteed regular income for life. The other part funds a life insurance policy, which makes sure that the original investment amount is returned to the estate. So you see, it's designed specifically for this situation, generating cash flow while preserving the original capital. You know, a strategy is only as good as its results. So let's look at the projected financial impacts of this plan over the next 5 years. What does it actually look like in practice? This chart shows the immediate benefit. Without this strategy, if Margaret had chosen to pay the daily fee, it would be costing her over $186 every single day. But by paying that RAD upfront, the cost drops to $163.50. That's a saving of over $23 a day.
That adds up to more than $8,400 a year. That's a real, tangible difference. Looking at the cash flow, we can see that expenses are higher than income, which that's expected. But the crucial thing here is the trend. The shortfall shrinks dramatically over 5 years. It goes from over $32,000 in year 1 down to less than $5,000 by year 5. The plan is making her financial situation more and more sustainable over time. So what about her big goal of preserving the estate? Well, this chart shows that even after 5 years of paying for full-time care, Margaret's projected total assets are still nearly $745,000. This really demonstrates that it is possible to fund care without completely decimating your life savings. And ultimately, this is what it all comes down to. Financial planning for aged care is about so much more than just numbers on a spreadsheet. It's about creating a clear, sustainable path forward that removes that financial stress and lets everyone focus on what truly matters.
And this leaves us with a question for everyone. Seeing a plan like Margaret's laid out really highlights the power of having a strategy, doesn't it? It prompts us all to think not just about today, but about making sure our own financial security is built to last no matter what comes next.
Thanks so much for watching. For more information or to seek professional advice that's tailored to your specific needs, you can contact Sean Sullivan by phone or email, or you can visit the website careadvisor.com.au.